Hey y'all, today I want to pull back the curtain a bit and explain how in the mortgage lending world we are sometimes able to work with a loan application that may be less than straightforward. So it's called manual underwriting. Most loans today are going to get pre-approved or get approved by a computer. So you enter your information, income, debts, credit score, you submit, and boom, the system spits out a decision. So it'll say that you're eligible, you're not eligible, and it gets that decision out faster than Amazon can deliver your cat food. Now, that's called automated underwriting. Now, we humans are still involved. There's still a person back there looking at each file, reviewing each file. We still need to read all of the findings that the automated underwriting system spits out. And then we have to ensure that the required documentation supports the information that we entered into the application, that the computer used to make its decision. So we have to make sure that your pay stubs support the income we entered, that your credit report supports the credit we entered. We have to make sure that all the requirements and the conditions are met, but the system is actually giving us that initial decision. Now, here's the thing. Not everybody's financial life is going to fit into one nice, neat little box. So maybe you're self-employed and you have some weird, funky income things going on. Maybe your income sometimes looks a little bit like a roller coaster. Maybe you had a medical emergency that kind of messed up your credit. Maybe you're really good at paying your bills, but you don't have a lot of credit. Maybe you don't carry a lot of debt. And that's where manual underwriting can come in and really help you out. So, automated underwriting, just to give you an analogy here, automated underwriting is going to be kind of like the express checkout lane at the grocery store. So, it's quick, it's efficient, there's no frills, but it only really works if you fit the rules, right? Because if you have a coupon, you have to wait until the person comes to do your coupon. If you want to buy alcohol, you have to wait till the person comes and checks your ID. 15 items or less, please. So that's automated underwriting. Manual underwriting is more like the full service cashier. So they don't mind that you have a cart full of stuff. You have some coupons, you have some alcohol, maybe you have some other special requests. They take a little more time and they actually work through it with you. That's manual underwriting. They're actually working through the loan file with you. So instead of a computer making the call, it's an actual human person, an actual human underwriter reviewing your file. Pretty cool. They look at it piece by piece. They're looking at each and every paycheck. They're looking at receipt by receipt. They're looking for proof that you're responsible with money. Even if your profile isn't cookie cutter perfect. They're looking at the whole picture instead of, just the surface. So, for example, if you don't have much credit history, they might look at what's called alternative credit or alternative trade lines. So that could be that they're looking that you pay all your rent on time, that you pay your utility bills on time, your car insurance. We can look at all those different trade lines. Even maybe a Netflix subscription that you've faithfully been paying. They're called non-traditional lines of credit. So that might help them build a credit profile for you instead of relying on things like credit cards, like the actual debt that you carry. So here's why that's helpful, because manual underwriting can sometimes say yes, even when the computer has said no. So the computer looks at all your information and is saying, like, this is not strong enough for me to make a positive decision on. Maybe a person could take a look at it and give you a more favorable decision. Manual underwriting is going to be more work. You're going to need to provide way more documentation, way more bank statements, rental history, letters of explanation. By the time it's all done, your underwriter will know you better than your best friend. They're going to have to go through everything. And yet, it may allow you to enter the purchase market sooner than just by going with automated underwriting. So for the right borrower, it can mean the difference between purchasing a home now and sitting on the sidelines until you're ready in 3 years when housing prices have gone up. So it's a really great option. If you have any questions, please either shoot me a DM or drop them in the comments. If you have any ideas that you might, or questions that you might want me to do for a video, let me know, like and subscribe, and I will see you next time. Bye-bye.